Sustainable investing, how to boost your portfolio with ESG. Are you looking to make a real difference with your money? Sustainable investing isn't just a trend, it's a growing movement where your investments align with your values. If you're interested in building a portfolio that not only helps you financially, but also supports environmental and social change, then ESG investing, environmental, social, and governance, is a strategy worth considering. Today, we're going to explore how ESG can boost your portfolio, making it more responsible, profitable, and future-focused. But before we jump in, don't forget to like, share, and subscribe to the channel to keep up with more tips on smart investing and building a better financial future. 10. What is ESG investing and why does it matter? Before we dive into how you can use ESG to boost your portfolio, let's quickly go over what ESG investing actually is. ESG stands for Environmental, Social, and Governance. It's a way of investing in companies that prioritize these values in their operations. Environmental. This involves how a company manages its impact on the environment. Do they minimize pollution? Are they working to reduce their carbon footprint and invest in renewable energy? Social. This focuses on a company's relationships with its employees, customers, suppliers, and the communities it operates in. Does the company have fair labor practices? Are they involved in philanthropy or community building efforts? Governance. This looks at a company's leadership. Are they transparent with shareholders? Do they follow ethical business practices and hold themselves accountable? ESG investing is about more than just doing good. It's also about identifying businesses that are well-positioned for long-term growth by adhering to sustainable practices. 9. The growing demand for sustainable investments. One reason why ESG investing is becoming increasingly popular is the rising demand for sustainability in business. With the demand for sustainable business practices growing, companies that are excelling in ESG are often better positioned for future success. By investing in these companies, you're not only supporting positive change, but you're also putting your money in firms that are more likely to thrive in an increasingly conscious market. 8. ESG investment strategies. How to start. So, how can you start building an ESG-focused portfolio? There are a few ways to do it. Direct stock picks. If you want to handpick your investments, look for companies with strong ESG performance. You can research a company's ESG score through resources like Morningstar or Sustainalytics. These funds pool money from various investors and invest in a basket of companies that meet certain ESG criteria. The good thing about these funds is they provide instant diversification, which reduces the risk of putting all your eggs in one basket. Starting with ESG mutual funds, or ETFs, is an easy, hands-off way to build a sustainable portfolio. With the right strategy, you can achieve both financial returns and positive impact. 7. How ESG can lead to better risk management. A major benefit of ESG investing is how it helps with risk management. Companies that follow strong environmental, social, and governance practices tend to be more stable. They're often better at handling regulatory changes, public opinion shifts, or environmental challenges. For example, companies with a clear commitment to sustainability are less likely to be caught off guard by new environmental regulations. They also tend to manage reputational risks better, as they've already built a solid foundation of social responsibility and transparency. In short, ESG investments can help shield you from long-term risks that companies without such practices might face, protecting your portfolio from volatility. 6. ESG investing is a long-term strategy. When you invest with an ESG focus, it's important to understand that it's a long-term strategy. Companies that perform well in ESG areas may not always show immediate financial rewards, but they are often better equipped for future success. This is because they are positioning themselves for long-term sustainability, environmentally, socially, and economically. For example, companies with strong environmental practices may eventually save money through energy efficiency, or their products may become more in demand as consumer preference shifts towards sustainability. The benefits of ESG investing may take time, but they are designed to ensure that companies remain competitive and relevant in a changing world. By sticking with ESG-focused investments over the long run, you're likely to see better returns as more businesses embrace sustainability practices. 5. The The role of corporate social responsibility, CSR, in ESG. Corporate social responsibility, CSR, is closely related to ESG investing. CSR refers to a company's efforts to improve its impact on society and the environment. Companies that integrate CSR into their business models are usually more transparent, ethical, and community-focused, qualities that align with ESG standards. For example, a company with a strong CSR program may have initiatives aimed at reducing its carbon emissions, supporting local communities, or improving labor standards. These efforts make a company more attractive to ESG investors who want to see businesses that not only make profits, but also contribute positively to society. Investing in companies with robust CSR programs is one way to ensure that your investments are aligned with ethical and sustainable practices. 4. ESG and financial performance. You might be wondering if focusing on ESG means sacrificing returns. The good news is, it doesn't have to. In fact, many studies have shown that companies with strong ESG performance can often deliver better financial returns in the long run. The reasoning behind this is simple. Companies that are environmentally and socially responsible tend to be better managed and less exposed to risks. They have strong governance structures in place and are less likely to face costly regulatory issues or scandals. In other words, companies that prioritize ESG are typically more forward-thinking and more prepared for the future. This means that ESG investing doesn't just feel good, it can also make good financial sense. 3. The growing popularity of green bonds. One way to dive into sustainable investing is through green bonds. These are fixed income securities issued by companies or governments to fund projects with positive environmental or social impacts. Green bonds are used to finance renewable energy projects, clean water initiatives, and more. For investors looking to support sustainable development and still earn steady returns, green bonds are a great option. They allow you to directly fund projects that aim to create a more sustainable world while providing a relatively stable source of income. Green bonds are becoming increasingly popular, and they represent a fantastic opportunity for those who want to combine financial growth with environmental responsibility. 2. The rise of impact investing. Impact investing is a type of sustainable investing that goes beyond ESG criteria. It involves actively investing in companies, organizations, and funds with the intention of generating a measurable social or environmental impact alongside a financial return. While ESG investing focuses on companies that are already performing well in these areas, impact investing takes it a step further by targeting investments that are directly aimed at solving global challenges like climate change, poverty, or healthcare access. For those looking to make a direct, measurable difference with their investments, impact investing offers an exciting opportunity to drive change while also earning a return. 1. The future of ESG. Investing. A growing market. ESG investing is only going to keep growing. With more individuals, institutions, and governments getting involved in sustainability, the market for ESG investments is expanding rapidly. More companies are being held accountable for their environmental and social impacts, and investors are increasingly prioritizing these factors. The demand for sustainable investment options is only going to increase as more people become aware of the long-term benefits of ESG practices. As a result, the ESG space will continue to innovate, making it easier for investors to find sustainable options that match their values. By investing in ESG, you're not only boosting your portfolio, but you're also contributing to the broader movement toward a more sustainable future. That wraps up our look at how sustainable investing with ESG can boost your portfolio while making a positive impact. By choosing to focus on environmental, social, and governance factors, you're aligning your financial goals with your values and setting yourself up for long-term success. If you found this video helpful, don't forget to hit that like button, share it with your friends, and subscribe for more insights on how to grow your wealth while supporting positive change. Thanks for watching, and I'll see you in the next one.